What if I told you that only a handful of numbers could be the difference between you making $1 million this year versus 500,000? Today, we're going to crack the code on the 5 most powerful KPI metrics, your secret weapons to boosting cash flow, making smarter scaling decisions, and ultimately turbocharging your bottom line. So I recorded a walkthrough on my screen. Let's jump right in. Here we are. I've got a massive annual performance report. We leverage this report along with so many others daily. This software, it's called Fathom. If you're doing your books on your own, or you're handling your finance, or if you're the accounting manager for your company, whatever it might be, this is a great software. We use this and it helps us deliver the data insights and helps us uncover opportunities as well as risks that you want to be aware of if you're the CEO, the business owner. Doesn't matter if you're an agency owner, e-com brand, consultant, coach, dropshipper, all these things apply. I'm going to focus on a few critical metrics and walk through examples, walk through definitions, and I'll try to make this quick because I'm sure this is your favorite thing to do is go through KPI metrics definitions. All right, so let's dive in. First things first, here's a really helpful graph that you can start through the perspective of your KPI metrics if you were on track or off track with those. This software will tap into your accounting platform, whether you use QuickBooks or Xero, it APIs into that and brings all the data over, which again is why I just preach so much that if your data isn't accurate, it doesn't really matter what these reports look like, how fancy they can be, how extensive they are, because if the numbers aren't right, your data is skewed and you're going to be making decisions based off of things that aren't true. Okay. I actually talk about this in the prior video that I put out. I wrote actually a 20-page doc that I'll link the video to that below as well for you to look at after. So let's go through just a few. First things first, I think it's really important to focus on the customer, right? Average sales per transaction and average sales per customer. That's these two guys right down here. How much are you making per transaction and how much are you making per customer, right? So if you have, let's say, a lead generation agency or a staffing agency, and you've got 3 different types of service deliverabilities, like 3 different types of services or products. What are you making on a per transaction basis? And what are you making for each customer, right? So say you make $10,000 and you're really excited that you just signed this $10,000 per month client. That's great until you find out that the cost to fulfill it is $8,000, right? So heard the story day in and day out. You see it all the time on Twitter of revenue screenshots. They look great. You might have done 400 grand as a dropshipper over the course of the last 2 months, but your profit margin was 5%. These things really stack up and they matter. And it's important that you track these. This is a great report to be able to do that. AP and AR days. How long does it take for the activity, right? The invoices for each client that you send out. Does it take 12 days to get paid? Or do you have terms for a bill that you have where you can't pay that in 30 days or 60 days? The longer you can extend the payment made to creditors, like your credit card payment. I need to actually talk about this more. I'll save it for another video, but there is different abilities and capabilities to leverage 0% APR credit cards for your business versus taking out a loan and immediately being stuck with a 13% interest rate that you're dealing with payments on. Being able to extend the capability to pay that money back without having to pay interest is a very helpful tool to have in your tool belt. So it's important to track this because it's going to funnel into your operations. Why are our days outstanding for invoices that we send out taking so long to hit our bank account? Is it the terms? Are they too flexible? Or are we not keeping up with this? Is somebody not doing their job in making sure they're reaching out to these clients that are ready to make payment, but they just don't for whatever reason? Also, it's a good metric to know like how your market's doing. If you're in the middle of a specific niche and you find that this month our time taken to get those invoices paid took twice as long versus last month, that could be a market-wide or a niche-wide indicator that potentially this niche is struggling to get cash and pay their bills. The longer you take to get those invoices paid, the more time that person has to pay other people. So you can quickly get into a situation where if you're taking too long, by the time you get to them and hound them and say, hey, look, dude, this is due, they've already paid all their other vendors and now they don't have money to pay you. and they're taking advantage of you. So it happens. I mean, it really does happen. Free cash flow. This guy right here, making sure you're tracking your metrics in terms of what cash you have at the end of the month after your operating activities, financing activities. These things really matter, because if you can't forecast out 2-3 months from now, you don't know if you have the cash on hand to be able to pay your employees. You might not have the cash on hand to make X, Y, and Z investment in equipment or a potential mastermind. There's many different examples of that. Let's see. I'm going to go through some more here. You can also take a look at the degree of importance, right? So if you have a low priority, medium priority, high priority, critical priority, this chart will segment those KPIs based on it and show you a nice little graph here. So off track versus on track. What about your operating profit, your gross profit margin? Like, these are the critical ones right here. Is your revenue growing? Is your gross profit percentage, how's that doing? You know, you might look at this, and this is right now comparing 2022 to 2023. Did your gross profit percentage increase? And again, the gross profit percentage is above all the other ancillary costs and expenses. This is like typically focused on the cost of service. If you're, say, a lead gen agency owner, right? Travel and meals and entertainment, like that's all below the gross profit. If you find that your gross profit percentage month over month or this quarter versus last is nosediving, you might want to look into like why that is. It could be maybe my ability to increase my revenue has, taken a nosedive, or the cost to fulfill has gone. I'm not managing my independent contractors enough. They're potentially overbilling me. These things are going to have an effect on, the sustainability and the viability of your business as a whole, and also what you end up taking home at the end of the month or the year, right? So again, really important stuff that you got to keep on, keep a close eye on. And this report is one of many that we use on a daily basis to essentially keep a good hand and really help guide our clients and extract a lot of these kind of nuanced metrics and things like that to help them make better scaling decisions and ultimately make more money. We're not just bookkeepers here. We're actually focused specifically on taking the numbers that are accurate, getting them accurate if need be, and then finding those opportunities and identifying those risks and supplying that ammo for the business owner to make better decisions. So let's go through some KPI results, some examples here. First things first, one of the great things about this software, again, it's called Fathom. You can actually get alerts for specific metrics that don't meet its target. So you can have a target for all this stuff. Look at all that. Liquidity, cash flow, efficiency, growth, gearing, activity, profitability, all this stuff you can have, boom, right in front of your face, and it'll alert you when you didn't meet your target based on a specific metric. So you were looking to have 12% growth or an operating profit margin, but you actually had 8.21, right? So I would say, if you're an agency, this is probably not even close to what you should be profiting for a margin. Ideally, if you watch like Alex Hormozy videos, you're looking at 70 to 80% margin. That's what your goal should be. This is probably more so like a drop shipper, maybe potentially even a staffing agency. It's just getting a slight margin on the hourly cost to staff independent contractor for a specific role. Accounts receivable days, like I just was talking about, this is saying that over 82 days, we were able to get cash in the door versus it only took us 45 days. That was our target, actually. So why is that? That is not a good metric to see. And you might want to start making some determinations as to, is this a market problem, or is this somebody in our company that's handling it? Or if it's you, that's not following up enough. These things are going to help keep you in check and be able to essentially streamline your operations. It goes way beyond just the financial impact, because the financial impact includes everything. So much is happening that ends up hitting the finance and the financials. So knowing these things are critical. Cash on hand. If you wanted to have $100,000 at the end of the month, at the end of the year, and you actually ended up with zero, that's, I would say, is a pretty big problem. All these things. I'm going to skip ahead here. Even getting into break-even points. At what point are you now going into more of a sustainable profit over and above your fixed costs and your variable costs? Like knowing what that number is and that point in time is going to help you determine also like where we are in the year. If you hit that point in April versus October of last year, like that's a pretty good sign that you're growing and you're increasing your profit margins, and you can start leveraging more opportunities and have more cash to deploy to do certain things. Looking at the top 10 expense accounts versus top 10 revenue accounts. Why is this number so high? Or what was the difference over last year or last quarter, whatever it is? Looking at a sales revenue number for each component of your sales. That's also really important. There's a lot of stuff here, guys. I'm really not gonna take too much of your time because we could really talk to the cows come home, but I'm not gonna dive too into it. But one thing I did want to say is like being able to look at the variance as a percentage is really important as well, because not only is, say you're doing your own books, right? And you see that something's like wildly off like this, or 186%, you boosted your operating profit like crazy. Is that actually accurate? I mean, if you're doing your own books, I would say it's important to make sure that even if it's a really good result, you check it. Make sure that that's actually accurate, because if it's not and you just categorize something differently, you might be looking at saying, oh, well, I made a ton of money. I can go buy this Maserati, right? Like if that's a mistake you made 6 months down the road after you already paid for that car, you're going to have issues, right? Or the flip side where something was wildly off and it was a negative result that you need to really make sure you tidy up. So all these things have a purpose. And lastly, I'm just going to really quickly redefine these and then we'll be done here because I really don't want to bore you too much. But again, it's important. Show goes on. Accounts payable days. How long do you have to pay a creditor, right? Being able to extend that as long as possible is very advantageous for you. If you are extending it way too long though, like say you're taking way too long to pay a bill, that could be an indication that you have problems being sufficient with enough working capital and your ability to pay those creditors. Accounts receivable, it's the opposite. I talked about it before. Having a lower number is better. You know, if it's 45 days and you're able to get it down to 10, that's a pretty big win right there. And tracking that over time is going to help you. It'll also tell you the improvement if you implement a fix, right? So say you do X, Y, and Z because you see this number was way too high. The next month when you check on it and you'll see the result of that action and see that either it really drastically reduced or it stayed the same, basically know that worked or it didn't, and then come up with another solution. But if you don't have this tracked, you're not going to know and you're not going to be able to make those process improvements. And that's one of the really big things that a CFO brings to the table is it's so much more than just doing the books. It's like looking at your operations, streamlining them, looking at alerts that you need to be aware of, and highlighting opportunities and risks so that you can do what you need to do. Average sales per customer, average sales per transaction, right? Being able to know your profitability margin. I talked about this in this huge document that I released, and I went through a walkthrough video. I'll even link that below as well. Feel free to check that out. It's actually, I think, really, really helpful for you. I walked through a lot of processes, but knowing your margin per client is going to allow you to be able to know how much you can charge if they renew their service, right? If you need to raise prices, or if you're negotiating on a sales call, you know that what the floor is for you to still keep that margin that you want. Being able to do that if you're adding multiple layers of your service in an invoice, in a proposal, in a quote, that all comes back to the numbers, right? So you can see now where it's not just, hey, let's just do your books and you got a bookkeeper for a month. Way more than that. All right, so that I hope was enough detail for you to highlight the importance of tracking your KPIs and walk through some important ones for you. Let me know which ones are you tracking, which ones you need more clarity on. Shoot a comment over to me, follow me on Twitter. I have that link below as well. And if you want to work with us and you want to get this stuff cleaned up, finances, your decision-making capabilities, if you want that stuff tidied up and you want a CFO that's going to be there for you for the long term, work with us. Book a call, let's talk, and I'll see if I can help you, okay? But subscribe, shoot this over a like if you did like it, and I'll catch you on the next one. I'm gonna be increasing the amount of videos that I put out, and I hope you enjoyed, so have a great rest of your day.